Welcome back. As we approach March 11th, the third anniversary of the COVID-19 pandemic, we've seen businesses pivot in new ways to take advantage of opportunities and reduce risk caused by the pandemic. Companies have adopted hybrid workforces, tackled surging demand, and taken advantage of home delivery. And joining us now to discuss how those pandemic winners and losers is Kearney Lead Partner Greg Portell, joined by Yahoo Finance's Anjalee Khemlani. Thank you for joining us here today. Let me just start. We saw a number of trends emerge over the pandemic. Some of them were walked back. Some of them are still with us. Just what's your big picture view of how things have evolved?
Well, obviously, when you have a disruption like a pandemic, you have an enormous change in behavior right away. And that does create that artificial demand and artificial behavior shift that then obviously needs to come back. So I think you found that people are much more comfortable working in virtual environments. And that is something that we probably wouldn't have experienced or gotten to this quickly without that kind of shock like a pandemic.
Greg, Anjalee here. I wonder about that because we saw it play out pretty differently for different companies and different sectors. But we know that broadly speaking, one of the biggest impacts has been on small businesses. So curious to know your thoughts on how that plays out moving forward. Do we have maybe a reversal? Is, pre-2020 coming back anytime soon? Or are we in really truly a new long-standing phase here where local restaurants and the like just don't have a path forward?
Well, what's interesting is prior to the pandemic, we saw consumers in particular really embrace local and community. That's when you saw your beer pubs, for example, were really starting to pop up. Local restaurants were frequented. And the pandemic obviously shut that down because the larger companies were able to pivot and change and create degrees of freedom in their business model that a small boutique or a small restaurant just wasn't able to do. Now that we're coming out of the pandemic, we saw a surge to those small businesses again for a couple of reasons. One, we know consumers want that sense of community, and that's obviously tied to local businesses. And then secondly, the economy overall realized that that sector of the economy was just devastated by COVID. So there's a little bit of rebuilding that needs to happen, and communities, governments, and consumers in particular have really adopted that.
Go ahead.
Well, what about the tech part of it? Because we saw the adoption of tech. I know specifically on the healthcare side, there were discussions about whether or not telehealth was here to stay as a dominant force. DocuSign we saw, dropped earlier today, I believe. So there's been a mixed picture when it comes to who won and who lost on the tech side. What do you see as the area where companies really need to focus when it comes to the tech integration, considering the fact that we're now with hybrid workforces?
Well, obviously, the change in behavior created enormous scale quickly. And companies really had a couple of problems that came out of that. One, their growth algorithm that investors use to figure out whether a company is successful or not really got thrown off. And so it was very difficult for investors to say this company is doing well or not well because so much of the demand was artificially driven. And then when you look at the way companies reacted to that, if company got stuck just servicing their current business model or trying to fix operational issues, they weren't able to plan for that second and third wave of business growth that we knew would come out of a return to something closer to normal. So you're really looking for businesses that operated like businesses and built business models, built capabilities that were more suited for a longer-term business environment as opposed to a short-term blip in demand.
And you also had, I think this is what you were getting at, but you had companies like maybe Peloton, Carvana, who got way ahead of themselves, saw that initial demand spike and just got, I guess, way ahead of themselves in terms of capital investment and created their own little bubble. Just wondering, have we seen this largely correct itself, or do you see another leg down for some of these companies?
Well, clearly the market is showing that there's a correction. If you think about the way businesses get built over time, they have to survive multiple business cycles. The surge associated with COVID gave a lot of those pandemic darlings the opportunity to get that initial bump, and they were able to do it. But when you think about some of the home gym equipment examples, how many times do you need to refresh that equipment? That needs to be factored into the long-term business model and ultimately the long-term valuation of these companies. until management teams are able to do that and create a longer term narrative story, it's very difficult for them to give the investor community confidence in that algorithm and the stability of their performance over time.
I wonder about all of this in context of the jobs report and how things have been progressing over the last several months. We know that, while there have been jobs added, we've heard about some really major layoffs in certain sectors. And to the point about right sizing, do you see maybe a shift in what the future of the labor market is and whether or not this adoption of a hybrid workforce changes who becomes a lead sector or what companies become stronger?
Well, part of the downturn is just companies are naturally at that stage of cycle. We haven't really experienced a massive tech layoff like we're experiencing this time. So just like every sector goes through the cycles, this just happens to be the turn for those growth companies in the tech sector to retrench a little bit. Now, the question we're looking at Kearney when it comes to labor to demand matching is the skill that you need available, or do companies need to take a more active role in developing that? Now, as you see the tech sector start to lay people off, that produces a lot of high quality tech talent that other companies can quickly pick up. And that sector gets absorbed fairly quickly. But some of the other sectors may not be as quick to respond and to recover.
And we did see a drop in information technology of about 25,000 jobs on this morning's report. Really appreciate you being here today. Kearney Lead Partner Greg Portell and Yahoo Finance's Anjalee Khemlani. Thank you.